guys, I'm hoping you are all doing really well. In this session, we're going to first learn about AMT and then we're going to learn about 115 BSE. So let's talk about our first concept, which is AMT, which stands for Alternate Minimum Tax. Alternate Minimum Tax covered by Section 115 JC. Now listen. This concept of alternate minimum tax, what is it? To whom is it applicable? How do we do the computation? All the nitty-gritties of this concept we will understand first. Then we will work out a question on this. That's how we will gain expertise on this concept. See, first of all, let's talk about the applicability. Applicability because this concept is not applicable to every assessee. So my very first point is going to be about applicability, that this concept of AMT is applicable to whom? See, it is applicable, number one, to individuals, HUF, AOP, BOI, AJP, and it is also applicable to partnership firm and LLP. But however, point to be noted, it doesn't apply to every individual HUF, AOP, BOI, AJP. It applies only to those individuals HUF, AOP, BOI and AJP whose adjusted total income is more than 20 lakh rupees. Are you understanding? See, either you be firm and LLP. For firm and LLP, we are not talking about the total income of 20 lakh. That criteria itself is not there. This criteria that adjusted total income should be more than 20 lakhs. This criteria is only for individual HUF, AOP, BOI, AJP. This criteria is not applicable to firms and LLPs. Which means this concept of AMT, will it apply to all firms and LLP? Yes. But will it apply to all individuals HUF, AOP, BOI, AJP? No. It will apply only to those individual HUF, AOP, BOI, AJP whose adjusted total income is more than 20 lakhs. But if your assessee is a firm or an LLP, doesn't matter what the adjusted total income is, AMT will apply. Okay. But however, please note that there is one person who is missing out of this list. Companies. Guys, we did not put companies over here. So AMT is not applicable to companies. The reason is that for companies, we have a minimum alternate tax instead, MAT. So we apply MAT for companies, we don't apply AMT for companies. And MAT is something which you will be learning in your finals. All right. So under applicability, my first condition is that who is the assessee? Assessee should either be an individual HUF, AOP, BOI, AJP whose adjusted total income is more than 20 lakhs, or this person should be firm or LLP. Now you would be wondering that what exactly do you mean by adjusted total income? Let me tell you, how do you calculate this adjusted total income? See, you will first of all do the normal calculation of income. You will find the normal total income of the assessee, whatever is the total income of the assessee, the normal total income of the assessee. When I say normal total income of the assessee, I'm talking about as per the normal provisions, which means not as per 115 BSE. In simple words, if assessee is following 115 BSE, AMT will not apply. AMT will come into the picture only when my assessee is following the normal provisions. You'll understand that as I proceed forward. Don't worry about that. So adjusted total income means you will first find the total income, and this total income you will find as per the normal provisions of the Act, which means not as per 115 BSE. As per the normal provisions of the Act, you will find the total income of the assessee. To this, you will add back Section 10AA tax holiday if the assessee has enjoyed. You know what is 10AA very well? The section which talks about SEZ units, export turnover of SEZ units, net profit from export turnover of SEZ unit, you get 10AA tax holiday. So you will reverse that tax holiday, you will reverse that benefit, you will add back the 10AA tax holiday. You will also add back Chapter 6A Part C deductions. Chapter 6A Part C deductions. Now, in your syllabus, what are the Chapter 6A Part C deductions? In your syllabus, Chapter 6A Part C deductions are only three. Number one, you have ATJJAA. Then number two, you have Section ATQQB. And finally, you have Section ATRRB. So, in your syllabus, only three Chapter 6A Part C deductions. ATJJAA, ATQQB and ATRRB, you'll add back these as well. Number three, you will add back Section 35AD deduction. You know what is 35AD deduction, right? The deduction which we generally give to assessees who are carrying on specified businesses. Remember, cold storage facility, warehousing facility for storage of agricultural produce, warehousing facility for storage of sugar, then hotels, hospitals, that 35AD specified businesses. So if your assessee has enjoyed 35AD deduction, we'll reverse that also, we'll add that back as well. But 35AD assets, you can claim depreciation. You will claim depreciation on these 35AD assets. Like for example, let's say to do the specified business, you had purchased one building. That building you would have taken 35AD deduction. So we will ask you to reverse the 35AD deduction. You please add back the 35AD deduction. But if you're reversing the 35AD deduction, then give me depreciation on that building. See, earlier when I had, let me give you some clarity. We had covered all this in our PGBP chapter. But just in case you have forgotten about it, let me give you a small revision about it. See, let us say my assessee is carrying on a cold storage facility. Okay, he's carrying on a cold storage facility. And this is a specified business under section 35AD. Now what happened is this assessee purchased a building for the purpose of this cold storage facility. So this building, let's say he spent 10 lakh rupees and he purchased this building. Okay, now this building you will give him 35AD deduction, you will give him, guys. So tell me, you will claim 35AD deduction also. You will claim depreciation also, is it? No, you can't get best of both the worlds. You choose one, either 35AD deduction or depreciation, choose one. Is 35AD mandatory? No. You have a choice. Either you take 35AD deduction or you claim depreciation, but you can't get both. Let us say my assessee has chosen 35AD deduction, so which means he's going to give up depreciation, guys. Now, when I'm computing AMT, what will happen? How much 35AD deduction I've claimed? 10 lakh 35AD deduction I claimed, right? I'll add back that 10 lakh. So which means I am not claiming 35AD deduction, right? I'm reversing it. I'm adding it back. So if I am not claiming 35AD deduction, then you can give me depreciation, no? So therefore, on that 10 lakh, let's say building 10% depreciation, I will subtract 1 lakh depreciation. You got the logic. If I'm reversing 35AD, it means I'm not enjoying 35AD. So if I'm not enjoying 35AD, then you give me depreciation at least on the asset. So therefore, I'm going to reverse 35AD deduction, but on the 35AD assets, I can claim depreciation. Now understood, everybody? Yes, so this is how you will be computing your adjusted total income. You will see the total income as per the normal provisions of the Act. You will add back 10AA, you'll add back Chapter 6A Part C, you'll add back 35AD deduction, and on the 35AD assets, you can now claim depreciation. Whatever you get, this is going to be the adjusted total income of the assessee. This has to be more than 20 lakhs for individual HUF, AOP, BOY, AJP. Okay, this is my first point under applicability. The second point under the applicability is that this assessee must be having either 10AA or Chapter 6A Part C, or he must have claimed 35AD deduction. Out of these three, any one at least any one of these this assessee must be having. Either the assessee must have claimed 10AA tax holiday, or he must have claimed Chapter 6A Part C deduction, or he must have claimed 35AD deduction. Out of these three, any one at least he must have claimed. So guys, I have totally how many conditions under applicability now? I have two conditions. Condition number one under applicability is that who is the assessee? Either the assessee has to be an individual HUF, AOP, BOY, AJP whose adjusted total income is more than 20 lakh, or assessee has to be partnership firm LLP. Second condition under the applicability is that out of these three, at least one the assessee must be having either 10AA or Chapter 6A Part C or 35AD. At least one this assessee must be having. All right, guys. Now listen, this was my first point under AMT about applicability. Now listen, how does this whole process of AMT even work? What is AMT and how does it work? See, what you'll have to do is, if these criteria of applicability are fulfilled, assessee is, let's say, individual, adjusted total income is more than 20 lakh, assessee is having one of these. So let's say AMT is applicable. So if AMT is applicable, you will first of all follow the normal provisions of the Income Tax Act. On the basis of the normal provisions, you will find the total income of the assessee. On the basis of the total income, you will find the tax liability of the assessee. So, following the normal provisions of the Act, you will find the tax liability of the assessee. Similarly, following the AMT provisions, on the basis of these AMT provisions also, you will find the adjusted total income of the assessee. This is the adjusted total income of the assessee. On the basis of adjusted total income, we will calculate the AMT of the assessee. Now, this AMT has to be calculated at the rate of 18.5%. So, the AMT rate is 18.5%. All right. So, we have two tax liabilities in our hand now. We have tax liability as per the normal provisions, and we have AMT as per the AMT provisions. Now, out of these two tax liabilities, whichever is higher, the assessee has to pay. See, the whole logic is, understand that these three, 10AA, Chapter 6A, Part C, and 35AD, these are the three biggest benefits that Income Tax Act has given us. Because of these three big benefits, people end up saving a lot of tax. But the government is saying, see, I'm not going to take away these benefits from you. You enjoy these benefits, fine. But minimum 18.5% tax I want. So you reverse these benefits that you have enjoyed and give me minimum 18.5% tax you give me. On one side, the government is giving us these three benefits. On the other side, the government is saying, see, I want minimum 18.5% tax. Otherwise, what is happening? Because of these three benefits, people are saying no tax, no income, nil tax, too much tax benefit they are taking. Yes, these sections were meant to be beneficial for the assessee, but then the government was also losing a lot of tax revenue because of these three sections. So the government said you reverse these benefits and at least 18.5% bare minimum, that much at least tax you give me. So therefore, we will have to see what is a tax liability as per the normal provisions. What is a tax liability? I'll compare that with the tax liability as per AMT, and out of these two, whichever is the higher, that is what my assessee will have to pay. Are you understanding? So assessee will have to pay whichever is higher. All right. Now let us say AMT happens to be higher. If AMT happens to be higher, then this adjusted total income of the assessee, this will be deemed to be the total income of the assessee. Understanding? If the AMT happens to be higher number, then assessee will be paying AMT, guys. So if assessee is paying AMT, then this adjusted total income will be deemed to be the total income of the assessee. All right. Now listen, I'll give you some examples to help you understand this a little better. Listen to me very carefully. See, let's take a situation. I'm giving you some examples. My first example. Let's say I did the calculation as per the normal provisions and I found the normal income tax liability. I did the AMT calculation also. Normal income tax was higher than AMT. So what are you going to ask me to pay? You'll ask me to pay normal income tax, guys. You'll ask me to pay whichever is higher. Normal income tax is higher. You'll ask me to pay normal income tax. But let us say, what if the normal income tax of the assessee was less than AMT, which means AMT was more than normal income tax? Then, of course, you will ask me to pay AMT, right? However, there is a catch. Whenever we pay AMT, that is, whenever AMT is higher than normal income tax, in that situation, a special provision comes into the picture. I'll repeat again. Wherever AMT is higher than normal income tax, whenever I'm paying AMT, why am I paying AMT? Because AMT is higher. In that case, there will be a special provision. What is the special provision? The special provision is that we will have to see the difference between this AMT and normal income tax. This difference between these two numbers, we will call this as AMT credit. This AMT credit will have life of 15 assessment years. In simple words, this AMT credit can be carried forward for 15 assessment years. Now, in these 15 assessment years, what will I do with this AMT credit? This AMT credit can be adjusted against normal income tax liability. It can be adjusted against normal income tax liability. Now, what does this mean? See, when will I have normal income tax liability? If normal income tax is higher than AMT, that is when I will have normal income tax liability, guys. So in these 15 years, if any of the years in these 15 years, if normal income tax is higher, in that year, you will let me adjust the AMT credit. You'll get much better understanding when I show you examples. But before we go to the example, you first try to grasp the theory properly so that in the example, very easily you're able to answer. We are saying over here that under AMT, we will do the calculation as per normal income tax. We'll do as per AMT. Whichever is higher, we'll have to pay. If normal income tax is higher, fine, we'll pay normal income tax. If AMT is higher, fine, we'll pay AMT. But if AMT is higher, if we are paying AMT, then we will find the difference between AMT and normal income tax. That difference will be called as AMT credit. This AMT credit can be carried forward for 15 years. In these 15 years, this AMT credit can be adjusted against normal income tax liability, which means in these 15 years, in whichever year the normal income tax is more than AMT, that year I will pay normal income tax because normal income tax is more than AMT. So whenever I'm paying as per the normal income tax provisions, in those years against the normal income tax, I can adjust the AMT credit and I can pay only the balance. All right, let me show you some examples to help you get a little better clarity about this. Look at this, guys. I've put an example for you over here. Let's say in year 1, the AMT was 100 and the normal income tax was 60. So which of the two will the assessee pay? The assessee will pay whichever is the higher, right? So clearly which is higher? AMT is higher. So we will ask the assessee to pay AMT of 100. But whenever AMT is higher, if the assessee is paying as per AMT, what did we decide? What did we learn over here? If assessee is paying as per AMT, assessee will have AMT credit, guys. The difference between AMT and normal income tax, assessee will get AMT credit. So how much AMT credit is our assessee going to get? What's the difference between AMT and normal income tax? 40 rupees, guys. That 40 rupees my assessee is going to get as AMT credit. Now this 40 rupees is belonging to year 1. Now, why should I keep a track that this 40 rupees is belonging to which year? Because I should keep track because this AMT credit will have a life of only 15 years, guys. So I should know that the AMT credit belongs to which year because only for 15 years I can utilize it. Now look at year 2. In year 2, which is higher, we are having AMT of 90 and normal income tax of 85. So again, we'll pay whichever is higher. Again, AMT is higher, guys. AMT 90 is higher. So we will be paying AMT of 90. Whenever AMT is higher, whenever we pay on the basis of AMT, we know that we will have AMT credit. So we are already having AMT credit of our year 1. We are already having 40 rupees AMT credit belonging to year 1. Now, in addition to that, we are going to get year 2 AMT credit also. Understanding. So what is my AMT credit for year 2? What is the difference? 90 and 85, our difference is 15 rupees. So 15 rupees will become my AMT credit for year 2. Now look at year 3. Year 3, if you see, AMT is only 75, guys. But normal income tax is 110. I will pay whichever is higher. Clearly, which is higher over here? The normal income tax of 110 is higher. So I'll pay the normal income tax of 110. But whenever I pay normal income tax, now I will see, do I have AMT credit? Yes. How much AMT credit am I having? 55 rupees AMT credit I'm having. What to do with AMT credit, guys? I've told you what to do with AMT credit. Look at this. AMT credit will be adjusted against normal income tax liability. Are you noticing in year 3, we are having normal income tax liability? We have to pay normal income tax of 110. We are having normal income tax liability of 110. So therefore, this will be, so therefore now when we are going to be paying normal income tax liability, that is when we can utilize this AMT credit. So what we will do is see what is our normal income tax liability here, 110. From this 110 rupees, we will subtract our AMT credit. How much AMT credit are we having? We are having AMT credit of 55 rupees. Can I subtract the full 55 rupees? No. This is where the catch is. I cannot subtract the full 55 rupees, guys. I can subtract only the difference between AMT and normal income tax. Government is saying, listen, assessee, come what may, minimum to minimum, you have to pay 75. So maximum, how much we can adjust? Maximum, we can adjust only the gap between these two numbers. That is, in this case, maximum, I can adjust only 35 rupees AMT AMT credit only I can adjust. I have to pay 75 rupees. Are you understanding? Government is saying, listen, assessee, if AMT is applicable for you, if these two conditions are fulfilled, and if AMT is applicable for you, and let's say normal income tax is higher, so normal income tax you're paying, but AMT credit you're having, yes, you can utilize AMT credit. What is the work of AMT credit? This is only the work of AMT credit, guys. Whenever normal income tax is higher, at that time I will adjust AMT credit. But government is saying you can't adjust full AMT credit. Whatever you're having, fully I will not let you adjust, because minimum to minimum, alternate minimum tax, this much minimum to minimum you have to pay. So only the difference between AMT and normal income tax, only this 35 rupees only the assessee is allowed to adjust as AMT credit. Okay, so how will we adjust this now? We had AMT credit of 40 rupees belonging to year 1, and we had AMT credit of 15 rupees belonging to year 2. So how are we going to adjust this? It will be something like this. We had AMT credit of 40 belonging to year 1 and 15 belonging to year 2. We are utilizing 35 rupees AMT credit. So I'll say that I've utilized it from year 1. So I'm left with AMT credit of 5 rupees of year 1, and I'm left with 15 rupees belonging to year 2. So 20 rupees of AMT credit is still remaining unutilized. You understood, everybody? This is how the whole concept of AMT works. This is my entire discussion with you with respect to the provision about AMT. Can we see it one final time? Can we revise it one final time? Yes, guys, come on, listen to me carefully. What are we talking about? We're talking about alternate minimum tax. Remember the section number, section 115 JC. Now, this concept of AMT is applicable to whom? It's applicable only to those persons who are going to fulfill two conditions. Condition number 1, who is the assessee? Either he is individual HUF, AOP, BOY, AJP, but I am not covering all individual HUF, AOP, BOY, AJP. I am covering only those individuals HUF, AOP, BOY, AJP whose adjusted total income is more than 20 lakh. Either assessee has to be individual HUF, AOP, BOY, AJP with adjusted total income more than 20 lakhs, or should be a partnership firm LLP. Company, no entry. Then we learned that in what is adjusted total income? Adjusted total income means your normal usual total income, reverse 10AA tax holiday, reverse chapter 6A part C deductions, reverse 3580 deduction. But for 3580 assets, now you can claim depreciation. Then we learned the second condition is that 10AA or chapter 6A part C or 3580, at least one out of these three this assessee must be enjoying. Then if both these conditions are fulfilled, welcome to AMT. Once you enter into AMT, now what? Once you enter into AMT, you will calculate the income tax as per the normal provisions, and you will calculate income tax as per the AMT provisions. Out of these two numbers, you will pick whichever is the higher number. That is what you will have to pay. In case AMT is higher, then whatever is the difference between normal income tax and AMT, that will become AMT credit. This AMT credit will have a life of 15 years. See, if normal income tax is more than AMT, there no credit. Then does the whole story of credit come into the picture? Only when AMT is more than normal income tax, only when you're paying AMT, that is when AMT credit concept will come into the picture. So the difference between these two will become the AMT credit. This will have a life of 15 years. Now, when can you utilize this AMT credit, guys? When can you utilize this AMT credit? This AMT credit you can utilize only and only when you have normal income tax liability. That is, in any year in the future, any subsequent year in the future, if normal income tax is more than AMT, then you will be paying normal income tax, right? So whenever you are paying normal income tax, against that only you can adjust AMT credit. AMT credit will have a life of how many years? 15 years. And this AMT credit you can use against what? You can use against only normal income tax. Then here I had shown you the example that in year 3, if you see, my normal income tax was higher. So because normal income tax is higher, I'll pay normal income tax. But whenever I'm paying normal income tax, I can adjust the AMT credit, guys. I had 55 rupees AMT credit, but I can't utilize full AMT credit. Max to max, how much I can utilize, guys? Only to the extent of this difference of 35 rupees, only this much I can utilize as AMT credit. Only the difference between AMT and normal income tax, only this 35 rupees alone I was allowed to enjoy as AMT credit. You understood? I had 55 rupees AMT credit, fully I can't adjust. Only to the extent of the difference between AMT and normal income tax, only to the extent of 35 rupees, only this much only I can enjoy as AMT credit. Crystal clear, guys. So this was our entire discussion with respect to AMT credit and AMT, section 115 JC. See, before I take you to the question on AMT, I have put on your screen 2 questions with respect to AMT, okay? Let's discuss this and then we'll go to the computation question. Look at the first subdivision over here, very interesting. What if the assessee has a special rate income like 112 LTCG? Are you understanding? I'm trying to complicate this a little bit, trying to make you think a little bit. What if assessee has special rate incomes like 112 LTCG? In AMT computation, what would be the tax rate on such LTCG? So on this LTCG, are you going to pay tax at the special rate, which is 20%? Or will you pay AMT 18.5% only? You're doing AMT calculation, right? When you're doing AMT calculation, at that time, in your total income, you're having some special rate income. On the special rate income also, will you pay AMT only, or will you do the calculation as per the special rate? You will do the calculation as per AMT only. See, even if your assessee is having special rate incomes, when you're doing AMT calculation, even on special rate incomes also, you will calculate on the basis of 18.5% only. Is this crystal clear to everybody? Yes, guys, you got the point, right? So even if the assessee is having special rate incomes, in AMT computation, on special rate income also, it's going to be 18.5% only. In simple words, in AMT computation, on all the assessee's income, tax liability will be 18.5% only. All right, no special taxation rates for special rate incomes. Now look at the second question over here. This is a scenario, all right? I've put a scenario over here, and relating to the scenario, I have put 2 questions over here. In assessment year 23-24, the assessee was following the normal provisions of income tax, let's say. Normal provisions means what? Assessee was not following 115 BSE. And assessee's AMT liability was more than the normal tax liability. AMT is more than normal tax. So obviously, what will you ask the assessee to pay? Obviously, you will ask the assessee to pay AMT. So AMT was paid. And we had AMT credit. Because we are paying AMT, because AMT is more than normal income tax, we'll have AMT credit. So AMT credit was, let's say, 50 rupees. So all this is in which year? In 23-24 assessment year, which means 22-23 previous year, they're having AMT credit of 50 rupees of that year. Okay. And this AMT credit will have a life of 15 assessment years. Now see, in assessment year 24-25, assessee was paying tax as per the default regime, which means section 115 BAC is following. In 24-25, assessment year 115 BAC is following. In 24-25, should assessee do AMT calculation first of all? In 24-25, assessee is following 115 BAC. Under 115 BAC, should the assessee do AMT calculation? No. In simple words, the chart would be something like this. See, if your assessee is following 115 BAC, okay, then in that case, AMT will be not applicable for the assessee. If the assessee is not following 115 BAC, that is, assessee is following the normal provisions, then in that case, AMT will apply. You will do the normal income tax calculation, you will do the AMT calculation, and out of these 2 numbers, whichever is higher, you will ask the assessee to pay. Okay, so if the assessee is following 115 BAC, should the assessee do AMT calculation also? If 115 BAC assessee is following, then AMT will not apply. AMT calculation will not come into the picture. Look at the second part now. In assessment year 24-25, as per the default regime, as per 115 BAC, let's say tax is 1000 rupees. So in this 24-25, assessee is following default regime, right? And default regime calculation on assessee is on tax 1000 rupees. But remember, last year's AMT credit, we are having 50 rupees. Can I adjust AMT credit against this 1000 rupees? No. Had this tax liability been as per the normal provisions, I would have subtracted the AMT credit against it. But if my assessee is following 115 BAC, then against the 115 BAC tax, AMT credit you cannot adjust. So can you adjust AMT credit against 115 BAC tax? No. For this also, I'll give you a small chart. You'll understand there will be no scope of confusion even left. See, listen, we're talking about AMT credit. Now, this AMT credit can be adjusted against what? Okay, that is a question. AMT credit can be adjusted against what? Question number 1. I am paying AMT. Against this, can I adjust AMT credit? No. I am paying normal income tax. Normal income tax means not as per 115 BSE. Then can you adjust AMT credit? Yes. I am paying income tax as per 115 BSE. As per the default tax regime I am paying, can I utilize AMT credit? Can I adjust AMT credit? No. Now, did you understand, guys? Everybody clear, right? So, AMT credit can be adjusted against what? AMT credit can be adjusted only against normal income tax. One learning. Another learning, when will assessee even think of AMT? Only if assessee is following normal provisions, only then assessee will think of AMT. If assessee is following 115 BSE, then AMT will be not applicable. So with this, guys, you've understood the whole concept of AMT. We've discussed about, first of all, the applicability, that when does AMT apply. Then we spoke about what are you supposed to pay, normal income tax or as per AMT, what are you supposed to pay? You're supposed to pay whichever is higher. Then we saw about AMT credit. Our next learning was about AMT credit over here. Then we saw these two special questions. They just made you think a little more. With this, you have understood the whole concept really, really well. Now, listen, we have a question, all right. This is a very good question with respect to AMT. This is a question from your total income chapter in your institute study material. All right. Before we do this question, I want to also discuss with you one more small point. Listen to me. Okay, I'll put it for you over here, okay? Now, sometimes what happens is the examiner asks us to compute tax in the manner most beneficial for the assessee. The examiner says, let's say, compute tax in a manner most beneficial to assessee. Now, in a situation like this, I'll give you a very simple method in which you can compute tax. Many a times students make a mistake when it comes to this, okay? A lot of silly mistakes happen over here. So I'm giving you a very, very simple, a very simplified manner in which you can handle a question like this. What you should do is, first you will compute as per the normal provisions. Normal provisions means whenever you do the calculation as per the normal provisions, you will not only do the normal provisions, you will also think about AMT. And out of these two numbers, you will always pick whichever is the higher number. This is going to be your tax liability as per the normal provisions. Then you will do as per 115 BSE, and as per 115 BSE also you will find your tax liability. Here you will not think about AMT. So now you have two tax liabilities, guys. On the basis of normal provisions, you have your normal income tax or AMT, whichever is higher, and as per 115 BSE, you will have a number over here. Now, out of these two numbers, you will pick whichever is a lower number. That will be the most beneficial for the assessee. Okay, so remember this chart. This chart is a very simplified manner in which you can, ensure that you don't make a silly mistake. Remember, this normal provisions would be normal tax or AMT, whichever is higher. You will compare that number with 115 BSE, and out of these two numbers, you will pick whichever is lesser. When will we do this? See, if they tell you that assessee has opted out of 115 BSE, then you will do just this calculation. If the question tells you assessee is following 115 BSE, you will do just this calculation. But if they say compute tax in a manner which is most beneficial for the assessee, which means as per normal, as per 115 BSE, whichever is lesser, that's going to be the most beneficial. So 115 BSE, fine. Normal, hereafter, whenever you do under normal, you will do normal or AMT, whichever is higher. Okay, now keep this in mind and have a look at the question. It's an interesting question. We'll first give this question a reading and then we'll work it out. The question says, Mr. X, an individual, set up a unit in SEZ in the financial year 16-17 for production of washing machines. The unit fulfills all the conditions of Section 10AA of the Income Tax Act 1961. So, assessee, first of all, has a unit in SEZ. This was set up in the financial year 16-17 and the unit is fulfilling all the conditions of Section 10AA. During the financial year 22-23, he has also set up a warehousing facility in a district of Tamil Nadu for storage of agricultural produce. And this is fulfilling all the conditions of section 35 AD. Okay, so my assessee is having two businesses, I can say. He's having a unit in SEZ where he's producing washing machines, and in addition to that, he's having a warehousing facility where he's storing agricultural produce. Capital expenditure in respect of the warehouse amounted to 75 lakhs. So for this warehouse, capital expenditure is 75 lakhs, including cost of land of 10 lakhs. We know very well that this warehouse will enjoy section 35 AD deduction, but under 35 AD, land, goodwill, and financial instruments are not allowed. So here my assessee has incurred capex of 75 lakhs, which includes land of 10 lakhs. So land I will not allow. Only the balance 65 lakhs only I will allow under 35 AD. Warehouse became operational with effect from 1st April 2023, okay? And the expenditure of 75 lakhs, so 75 lakhs was capitalized in the books on that date. So which means the 75 lakhs we had incurred before the commencement of the business. It's okay, 35 AD, even pre-commencement expenses we can claim. Upon commencement we can claim. Only one condition is that it should be capitalized in the books of accounts. And yes, it is capitalized in the books of accounts. Therefore, we can claim pre-commencement expenditure also in the current year. No problem. Then they've given us some more details for 23-24. Profit of the unit located in SEZ, export sales of the above unit, domestic sales of the above unit. So all this information they have given to us is about the SEZ unit. And then they've given us information here about the warehousing unit, profit from the operation of warehousing facility before 35 AD reduction. Look at this. Very carefully you have to interpret this, simple only, but just be a little attentive. Compute income tax, including AMT, under 115 JC of Mr. X for assessment year 24-25, both as per regular provisions also, as per 115 BAC also. So we will have to do this entire thing, guys. We'll have to do as per normal provisions also. We'll have to do as per 115 BAC also. They're asking us advise whether Mr. X should opt out of 115 BAC. So in simple words, we'll have to see what is 115 BAC tax liability, what is normal tax liability. We'll see which is lesser. If normal tax liability is lesser, we will tell the assessee opt out of 115 BAC. Okay, the whole question is clear. Yes, so this is how our entire answer is going to be. First, we'll do as per the normal provisions. We'll do the normal tax liability. We'll do the AMT tax liability. We'll pick whichever is higher. Then we'll do as per 115 BAC. We'll find the tax liability. Out of these two, we'll pick the lesser number. Okay, guys, come on, let's get to work. Let's begin. So, first of all, I'm going to be doing the calculation as per the normal provisions. Normal provisions means what? Normal provisions means I'm going to do the calculations without 115 BAC first. Now, under normal provisions, hereafter I've told you we'll have two parts, guys. What will be my two parts? My first part will be the normal regular tax calculation, and my second part will be AMT. So first we are going to be calculating as per the normal provisions. That is as per the slab rates, as per the applicable slab rates we will calculate, and then we will do as per AMT. So they're asking us to find income tax. To find income tax, first of all, we need total income, guys. So under the normal provisions of the income tax, first of all, I'm going to do computation of total income. All right. Keep in mind, we're not following 115 BAC. We're doing as per the normal provisions first. Okay. As per the normal provisions, we're calculating first. My assessee is having two businesses. First of all, my assessee is having the SEZ unit. So from this SEZ unit, what is the net profit of the assessee from the SEZ unit? See over here, profit of the unit located in SEZ is 40 lakhs. So my assessee is having SEZ unit profit of 40 lakhs. Then my assessee is also having a warehousing business for storage of agricultural produce. And from this warehouse, how much net profit has my assessee earned? Profit from operation of warehousing facility is 1 crore 5 lakhs. This is before 35 AD deduction. So warehousing, one second. Yeah. So listen, warehousing facility, the net profit is 1 crore 5 lakhs. From this, I will enjoy 35 AD deduction, guys. Right? So how much 35 AD deduction will we get? See, be careful. What's the total capex that we have incurred for the purpose of this warehouse? Total 75 lakhs we have incurred. Pre-commencement we have incurred, but we have capitalized it in the books of accounts upon commencement. Hence, even the pre-commencement, yes, we can consider. Total is 75 lakhs. This is including land of 10 lakhs. Land, goodwill and financial instruments are not allowed. So therefore, I will consider only the balance 65 lakhs, guys. 3580 deduction is going to be 65 lakhs. How did we get that? 75 lakhs minus 10 lakhs. So only 65 lakhs is what we will get under 3580 deduction. So what's going to be the assessee's taxable income from the warehousing business? From the warehousing business, it's going to be 40 lakh rupees. Okay, so what is this assessee's gross total income? The gross total income is 80 lakh rupees. Now, from this, we will subtract 10 AA tax holiday. See, 10 AA tax holiday is generally supposed to be deducted from the GTI. So, we will deduct it from the GTI. Why are we talking about 10 AA? Because my assessee is having a unit in SEZ. Therefore, we are talking about 10 AA tax holiday. Now, listen, whenever it comes to 10 AA tax holiday, you always got to check some conditions. All right. Condition number 1. My assessee should not be following 115 BAC. Because if my assessee is following 115 BAC, then my assessee will not enjoy 10 AA tax holiday. Yes, we are calculating as per normal provisions. Yes, condition 1 is fulfilled. We are not following 115 BAC. Then, condition number 2. The assessee must have set up the unit in an SEZ. Assessee must be having a unit in an SEZ. Yes, my assessee is having a unit in SEZ. Condition number 3. The assessee must have commenced the production of goods or providing services in this SEZ unit. The whole production work or rendering of services, all that should have started on or before 31st March 2020. Yes, even this condition is fulfilled because if you recall in this question, it is mentioned that the SEZ unit work started in 2016-17 itself. So much before 31st March 2020, before that itself, we have commenced the production work and the rendering of services from this SEZ unit. Then comes my condition number 4. The fourth condition is that assessee must have filed his ITR on or before the 139(1) due date, which means if my assessee files ITR late, if there's belated filing of ITR, then my assessee will not get 10 AA tax holiday. The question doesn't say anything about that. Let's assume this condition is fulfilled. Let's assume. So all the 4 conditions are fulfilled, guys. Condition number 1, assessee is not following 115 BAC. Condition 2, assessee is having a unit in SEZ. Condition number 3, in this SEZ unit, the assessee must have commenced either the manufacturing work or the rendering of services on or before 31st March 2020. And condition number 4, assessee has properly filed the ITR. See, the question doesn't say anything about this. Let's assume it is fulfilled. Okay. So all these conditions are fulfilled, which means my assessee is eligible for 10 AA tax holiday. Now, in 10 AA, how much deduction will you get? That depends upon which year are we in. First 5 years, 100% of net profits from export of this unit you will get as a deduction. Next 5 years, 50%. Next 5 years, 50%, or whatever is transferred into SEZ reinvestment reserve, whichever is lesser, we get as a deduction. Right, guys? Now, which year are we in right now? See, in this question, we are doing the calculation for previous year 23-24. And this SEZ unit, the manufacturing had started in 2016-17. So which year are we in? How will you calculate? How will you calculate? See, your most obvious calculation would be where you do 23-24 minus 16-17, which will be 7. But we'll always add a 1. Why are we adding a 1? We are in the 8th year. Why are we in the 8th year? Why did we add a 1? Because even the year in which you commenced, even that year you will get the deduction. So 16-17 also has to be included. That's why we're adding a 1, because even the year in which you commenced the manufacturing, even that year you will get a deduction. Guys, all this we had covered in a 10 AA deduction. I'm in a 10 AA deduction discussion. Are you able to recall? Long back we had discussed all this. Yes. So we are right now calculating in 23-24. We had commenced the manufacturing work in 16-17. So right now, if you see, we are in the 8th year. Why did we add a 1? We added a 1 because even the year in which we commenced 16-17, even that year has to be counted, because even that year you will get the benefit. So therefore, right now we are in the 8th year. So had we been in the first 5 years, you would have given me 100% deduction. If you are in the next 5 years, you will give me only 50% deduction, guys. So my 10 AA tax holiday will be 50% of the net profits of this SEZ unit. SEZ unit, what is the net profit? 40 lakhs. SEZ unit net profit is 40 lakhs. But what's the formula? 40 lakhs is the net profit of the entire SEZ unit. From the SEZ unit, you're making export sales also, domestic sales also. But how much deduction will you get? You will get a deduction only of that portion of net profit which is from the export turnover. So what's our formula? Our formula is net profit of the SEZ unit into export turnover divided by total turnover, guys. Basic proportionate calculation I'm doing, guys. So my net profit is 40 lakhs. My export turnover is 80 lakhs. And what is my total turnover? My total turnover is 100 lakhs. So this is how we will do the calculation. 40 lakhs into 80 lakhs divided by 100 lakhs, 50% of this. So 16 lakhs is going to be a 10AA tax holiday. Crystal clear. I'll give you one very quick summary. Under 10AA, if you want 10AA tax holiday, you have to fulfill some conditions. What are the conditions? Condition number 1 is that your assessee should first of all be opting out of 115 BSE. If the assessee is going to follow 115 BSE, I'm not going to give the assessee any 10AA deduction. All right, guys. So condition 1, my assessee must have opted out of 115 BSE. Condition number 2, my assessee must be having a unit in SEZ. From this SEZ unit, he must be either doing manufacturing of goods or he must be rendering services, and he must have started that work on or before 31st March 2020. And condition number 4, he must have filed the ITR on time. Within 139(1) unit itself, he must have filed the ITR. This assumption we are making in the question. All conditions fulfilled, 10AA applicable, 10AA because we are in the 8th year. How 8th year? Because actually speaking, 23-24 minus 16-17 is the 7th year. But even the year in which we commence our business, even that year we enjoy 10AA deduction. So therefore, I'm going to include 16-17 also. That's why we added a 1 over here. So this is the 8th year. So current year is the 8th year. In the first 5 years, 100% deduction. Second 5 years, only 50% deduction. 50% of what? 50% of net profit of this SEZ unit from export turnover. So net profit into export turnover by total turnover into 50%. 10AA tax holiday we're going to get is 16 lakh rupees. So therefore, what is my assessee's total income in this question? The assessee's total income is going to be 80 lakhs minus 16 lakhs. Total income is going to be 64 lakhs, guys. This is already in multiples of 10. No need to do any rounding off also. So as per the normal provisions without AMT, as per the normal provisions, on the basis of the normal provisions of the Act, we have calculated the total income. Now, on this total income, what's going to be the tax liability of the assessee? This was a total income calculation. Now, let's do the tax liability calculation. Guys, does my assessee have any special rate income? No. The 64 lakh is all fully normal rate income only. So my assessee's total income is 64 lakhs. What is going to be my assessee's basic exemption limit? The question says my assessee is an individual. The question does not say he's a senior citizen and all. So as per the normal provisions, the basic exemption limit is going to be 2,50,000, guys. My assessee's total income is 64 lakhs. So how will you calculate tax? What's going to be the basic tax? Up to 10 lakh, my assessee will anyways have to pay 1,12,500 plus 30% of whatever income my assessee has earned in excess of 10 lakh. Normal tax calculations. So 64 lakhs minus 10 lakhs into 30% plus 1,12,500. This is going to be 17,32,500. Okay. Then will we have any 87A rebate? No 87A rebate, guys. Total income is more than 5 lakhs. But will we have surcharge? Yes, total income is more than 50 lakh. More than 50 lakh up to 1 crore, surcharge rate is 10%. So 17,32,500 into 10%, that is 1,73,250. This is going to be your surcharge. Will we have any marginal relief? Not really, because our income is far away from 50 lakhs. So what's the total at this stage? The total tax at this stage is 19 lakhs 5,750. Okay. Now from to this, we'll also add cess. We'll add cess at the rate of 4%. That's going to be 76,230. So if you add up, the total tax is going to be 19,81,980, already in multiples of 10. No need to do any rounding off. So under the normal provisions, as per the slab rates, the tax liability of our assessee is 19,81,980. All right, guys. So this was as per the normal provisions. Now shall we do the AMT? Under normal provisions, first we've done the normal calculation. Now we'll do as per AMT. We are still under the normal provisions. Okay, we've not gone to 115 BSE yet. We'll talk about AMT now. Now see, whenever you want to do calculation under AMT, we have conditions. We have to check whether the conditions are fulfilled or not. We have two conditions. Condition number one, assessee is an individual over here. So the assessee's adjusted total income has to be more than 20 lakhs. And condition number two is that either 10 AA or 35 AD or chapter 6A part C, at least assessee must be having. Here if you see assessee is having 10 AA tax holiday also, he's having 35 AD deduction also. So therefore at least assessee is having, so yes, condition 2 is fulfilled. But we have to check the adjusted total income, is it more than 20 lakhs or not? So let's do the calculation of adjusted total income. Let's do the computation of adjusted total income. How are we going to do this computation? Listen to me very carefully. See, what did we learn? How to compute adjusted total income? We'll see the normal total income of the assessee as per the normal provisions. What is the total income of the assessee? To this, we'll add back 10 AA tax holiday. We'll add back any chapter 6A part C deduction if we have enjoyed. We'll add back 35 AD deduction, and on 35 AD asset, any depreciation if we can avail, we'll subtract that. That's how we'll get the adjusted total income number. Total income of the assessee is how much here? Total income of the assessee we've already calculated as per the normal provisions. It is 64 lakh rupees. So total income 64 lakh rupees. How much 10 AA did we avail? We've availed 10 AA of 16 lakh rupees, guys. So we'll add back 16 lakh rupees 10 AA. Did we have any chapter 6A part C, any 80 JJAA, any 80 QQB, any 80 RRB? No. But 35 AD we had. 35 AD deduction we had enjoyed of 65 lakh rupees. We'll add back. But on 35 AD asset, now we will claim depreciation, guys. Now, what is the 65 lakh rupees? Can I claim depreciation? See, the 65 lakh rupees, the question says that capital expenditure in respect of the warehouse amounted to 75 lakhs. So, for the warehouse, we've incurred 75 lakhs. It includes 10 lakhs of land. So, the balance 65 lakhs will be the warehouse building. 65 lakhs warehouse building, 10 lakhs land. So, on warehouse building, what will be the depreciation rate? Depreciation rate will be 10%, right? And the business commenced in the beginning of the year itself, which means full year the building was put to use. It was put to use for more than 180 days. So full year's depreciation I am enjoying over here, which is going to be 6,50,000 rupees. So what's this assessee's adjusted total income? The assessee's adjusted total income is going to be 1,38,50,000, which is clearly more than 20 lakhs. Even this condition is fulfilled, guys. So therefore, I can say that AMT is applicable for this assessee. Now, once I conclude that AMT is applicable, what's going to be the tax liability of the assessee as per AMT? The tax liability of the assessee. What's the percentage under AMT? The percentage is 18.5%. Right? So if I do the math, it will be something like this. The AMT will be 1,38,50,000 into 18.5%, which will work out to 25,62,250. Then can I enjoy 87A rebate? No, because this income is more than 5 lakhs. Will I have surcharge? Yes. 50 lakh to 1 crore, 10%. 1 crore to 2 crore, guys, 15% surcharge we'll have. So 25,62,250 into 15%, that's going to be 3,84,337.5. Till here, are we getting it right? Now this number is in decimal, so we can round it off. 3,84,337.5, we will round it off to 338, let's see. Now, will we have any marginal relief? No marginal relief because my income is much far away from 1 crore limit. So therefore, no marginal relief. So what's the total as of now? 25,62,250 plus 384,338. Our total tax right now is 29,46,588. All right. And from this now, to this we will now add cess at the rate of 4%. Which will work out to 1,17,864. And now if you add up, what's the total tax liability of this assessee? The total tax liability of this assessee, 29,46,588 plus 4%. This is going to be 306,4452. All right, guys, which is not in multiples of 10. So we will round it off. So it will be rounded off to the nearest multiple of 10. It will be rounded off to 30,64,452. All right. Now see, in this situation, if I follow the normal income tax provisions, if I follow the normal slab rates, my assessee's tax liability is 19,81,980. But if we do AMT calculation, it is 30,64,452. So obviously, what will my assessee have to pay? My assessee will have to pay AMT, guys. Assessee's tax liability will be as per AMT, right? So this is my first part of the calculation, that this entire discussion was as per the normal provisions, assuming my assessee has opted out of 115 BAC. Without 115 BAC, if you see, we've done the calculation as per the slab rate also, as per AMT also, and we've also spoken that AMT is more than the normal provisions. So therefore, AMT is what my assessee will have to pay. But if my assessee is paying as per AMT, then assessee will get AMT credit. Difference between AMT and normal provisions, assessee will get as AMT credit. Alright guys, so this is it about our normal provisions. Now same calculation let's do as per 115 BAC. So as per the default provisions or the default regime as in we are applying 115 BAC. If my assessee follows 115 BAC, then what will be the total income and the tax liability of the assessee? So first of all, we'll have to calculate the total income, guys. Now, what was the total income of the assessee? As per normal provisions, what was the total income of the assessee? See, we did the calculation over here. It was 64 lakh rupees. So to this, we'll make alterations. What are the alterations? See, first of all, if my assessee is following 115 BAC, will my assessee be able to enjoy 3580 deduction? No. And will my assessee get 10 AA tax holiday? No. So even 3580 deduction I will reverse, even 10 AA tax holiday I will reverse. So we will reverse 3580 deduction of 65 lakhs, we'll reverse that. But on the 3580 asset, what will we claim? But we can claim depreciation, because I'm not claiming 3580. So give me depreciation on the warehouse building. So 65 lakh into 10%, 6,50,000 I will enjoy as depreciation. And I'll also reverse the 10 AA tax holiday of 16 lakhs. So what is going to be my assessee's total income as per 115 BAC? As per 115 BAC, the assessee's total income is going to be 1,38,50,000. Do we get this number? As per 115 BAC, I've done the calculation, guys. I've under 115 BAC done some reversals. You will not get any 3580 deduction. You will not get 10 AA. Rest of it remains the same in this question. Now, if this is the income, what's going to be the tax liability of the assessee? See, under 115 BAC, the basic exemption limit will always be 3 lakh only, irrespective of whether the assessee happens to be a senior citizen or a super senior citizen. Basic exemption limit is 3 lakh only. Now, what's going to be the basic tax on the assessee? How do we calculate that? See, if assessee's income is up to 15 lakh. See, up to 15 lakh, he anyways has to pay 1,50,000 tax. I'm hoping you're aware of it. Up to 15 lakh, you anyways have to pay 1,50,000 tax plus what 30% of your assessee's income, 30% of your assessee's income in excess of 15 lakhs. I've used a shortcut over here. Just like how in normal provisions, we use the 1,12,500 number. Same way in 115 BAC, we use the 1,50,000 number. I hope you remember all this. Much earlier, we've discussed about all this. So the basic tax of the assessee is going to be how much? Let's do the math. 1,38,50,000 minus 15 lakh into 30% plus 1,50,000. This is going to be 38,55,000, guys. This is the basic tax. Then will I enjoy any 87A rebate? No, we will not enjoy, because the assessee's income is far away from what? Tell me, under 115 BAC for 87A rebate, what is the limit? Is it 5 lakhs limit? It is not 5 lakhs limit. In 115 BAC, it is 7 lakhs. And it is far away from 7 lakhs, so no 87A rebate. Will we have any surcharge? Yes, we will have surcharge. Income is between 1 crore to 2 crore. So 15% surcharge will be applicable. 38,55,000 into 15%. That's going to be 5,78,250. And then we'll subtract marginal relief. We don't have any marginal relief over here. So therefore, the tax liability of the assessee is going to be 44 lakhs. 33,250. 44,33,250. Okay. Now, we have to add cess, but we'll add cess at the rate of 4%, which will be 1,77,330. So the total tax liability of the assessee will be 46,10,580, already in multiples of 10. No need to do any rounding off. Okay. So with this, we've done all the tax computations under both 115 BAC also as per normal provisions also. Now see, we'll give our summary. See, first of all, as per the normal provisions, if you see, as per the slab rates, what was a tax liability? As per AMT, what is a tax liability? I am simply doing this calculation now, just that I'll put it in a tabular form. All right. So what is a normal provisions slab rate tax liability? 19,81,980. 19,81,980. What is the AMT liability? As per AMT, if you see, the liability was 30,64,450. 30,64,450. See, out of these two, you have to pay whichever is higher, right? Normal regime, we'll have to pay whichever is higher. Clearly, AMT is higher. 30,64,450 is what we'll have to pay. Under the default provision, under 115 BAC, how much you'll have to pay? Did we do a mistake, by the way? Should we have calculated AMT under 115 BAC also? No. You know very well, under 115 BAC, AMT is not applicable. So under 115 BAC, the tax liability would be 46 lakhs 10,580. So what are you going to suggest to the assessee? What should the assessee follow? Which is more beneficial for the assessee? Under normal provisions, 30,64,450. Under 115 BAC, 46 lakh 10,580. So which is more beneficial for the assessee? Beneficial will be your normal regime, which means without 115 BAC. This is a lesser number, guys. So you will advise your assessee that assessee, listen, you pay tax as per the normal provisions. You opt out of 115 BAC and you pay tax as per normal provisions. Opting out is going to be more beneficial for the assessee. But please notice, what is the number over here? The number is 30,64,450, which is the AMT number. So whenever we pay AMT, we will have one more thing, right? We will have AMT credit. Whenever we pay AMT, we will be having AMT credit. And AMT credit will be nothing but the difference between AMT minus the normal tax. So AMT is 30,64,450. The normal tax was 19,81,980. So what is the difference? The difference here is 10,82,470. This much is going to be the AMT credit, which will have a life of how many years? Which will have a life of 15 assessment years. Perfect. So this is it about our entire discussion with respect to this question. So if you look at your ICS study material, the question is actually not same as ICS study material question. There is one small change between my question and the ICS study material question. That's why the answer will not match. In ICS study material, if you see, the year of setting up is different. I think it is 1920, which means we are in the first 5 years. So therefore, they would have given 100% deduction. But in my question over here, it is 1617, and accordingly, we have worked out the answer. The crux of it remains the same, but you sort of understood, right? So as per the normal provisions we calculated, guys, it was 30,64,450. As per 115 BAC, we calculated it was 46,10,580. Out of these two numbers, which is more beneficial? Whichever is lesser is more beneficial. So we will tell the assessee that assessee, listen, you opt out of 115 BAC. Opt out of 115 BAC as in you follow the default, you follow the normal provisions. Normal provisions, if you follow, you'll have to pay only 30,64,450. Only this much you'll have to pay as tax. Now this number is the AMT number. So whenever we pay the AMT number, you'll have AMT credit. The difference between AMT and the normal tax will become your AMT credit. All right. Now, just to ensure that you have understood this properly, one small question I have for you. Just try answering that, all right? See, I've copied the same thing as it is, all right? Just one small change I am making over here. Listen. I am changing the 115 BAC number. Let us say The 115 BAC number was 16,10,580. Then what will you ask your assessee to do? In this case, what will you ask your assessee to do? You'll ask your assessee to pay which tax? You'll ask your assessee to pay whichever is lesser. No, 115 BAC is lesser. So beneficial would be 115 BAC. Beneficial would be the default regime. So under default regime, you'll ask your assessee to pay 16,10,580. Now tell me, what would the AMT credit be? Even here, if you see, AMT is higher than the slab rate. So under normal provisions, if you see, it is AMT only. But how much will be the AMT credit in this case? In this case, AMT credit will be 0. Why? Because tell me, are you actually paying AMT? Are you actually ending up paying AMT? No. What are you paying actually? End of the day, you're paying as per 115 BAC. No. Are you paying this AMT number? No. You're paying only as per 115 BAC. So will you have any AMT credit here? You will not have any AMT credit. You got it, right? You got the point, right? Yes. So if I was paying as per 115 BAC, then there will be no AMT credit. Because did I pay AMT? When will AMT credit come into the picture? AMT credit will come into the picture only when I'm paying AMT. Am I paying AMT? No, I'm paying as per 115 BAC. So therefore, there will be no AMT credit at all. Even though AMT is higher than normal income tax, no AMT credit at all. Got it? This is it, guys. This is it about our entire discussion with respect to AMT. All right. So under AMT, I think we've done a solid learning. If you're thorough with this entire session on AMT, any question with respect to AMT, so easily you will be able to sort it, take it from me. We first saw when will AMT apply. Then we discussed about how to calculate AMT. If AMT is higher, then we'll have to pay AMT. If normal provisions are higher, we'll pay as per normal provisions. AMT rate is 18.5%. Don't forget about that. We'll have AMT credit whenever AMT is more than normal income tax. We'll have AMT credit that we can utilize only against normal income tax liability, but only to the extent of the difference. Remember? Then under AMT, special rate incomes will also be taxed at the same AMT 18.5% only. No special tax for special rate incomes. Then if my assessee is following 115 BAC, no AMT. Also, AMT credit can't be utilized. And then finally, we had this extremely important chart over here. This simplifies the whole calculation of tax for you. That's what we did in this question. We did as per the normal provisions. We did as per AMT. We picked the higher number. We compared it with 115 BAC number. Out of these two numbers, we picked whichever is lesser. All right. So I'll close over here. I'll close the session here. I'll see you in the next session with another concept. Thank you, guys. Bye-bye.